Hello, you are welcome to La Prince Wealth Academy. My name is Prince Kilowe, and in this video, you are going to be learning how to draw trend lines. Now you have learned how to draw support and resistance. You've learned how to trade with support and resistance. It is time for you to learn how to draw trend lines and actually how to trade them. How do you draw trend line and then you make your trade based on what you have drawn? So let's get started. First of all, let's talk about what is a trend. A trend for an uptrend. An uptrend is when price makes series of higher highs and higher lows. This also means the market is bullish. This is an uptrend. Price makes series of higher highs and higher lows. I'm going to show you on the chart how it looks like. And then let's talk about downtrend. This is a downtrend. A downtrend is when price makes series of lower lows and lower highs. This also means bullish market. You go short during the downtrend and you go long during the uptrend. So let me take you to the chart and let us analyze this market based on trend lines. So what will qualify you to draw a trend line? First of all, you want to draw a trend line based on higher time frames. Rule number one, everything you're doing, even your support and resistance, make sure you're using the higher time frames to draw your trend line or your support and resistance. So let me start with daily time frame to draw this trend line and what will make you a trend line valid. So let's start with this. Okay, now remember, you just come here. If you have not watched the video on trend line, please watch the video on trading view. Come here. Let me have this on my favorite trend line. Okay, it's already here. It's already here, so I'll just drag it. You just click your trend line. You drag this first touch. Trend line, the rule is 2 touches. It must have 2 touches to become valid trend line. Your trend line must have 2 touches. If it does not have 2 touches, then the trend line is not valid. But this is 2 touches. What do I mean? Now, market was going up. Market was going up. It was going up, but now the uptrend ended here. What price did? Well, price came down, did a retest, right? Once price, this is the first touch, this is the second touch. After the second touch, the next thing you want to do is to wait for the third touch to happen. This is first and third, second. So you are supposed to have drawn your line after the second touch. This one, then the second touch, you draw a line. Then when are you going to trade? You want to trade when price come back for year, come back to test this your trend line before you want to place your trade. So this touch is your entry. Remember, you have all the entry strategy that I've taught you. You can apply those strategy on even the trend line. So there's also what they call channel. You may decide to also draw your channel for this particular market. Let's draw a channel from here. Right, you can draw it. Don't expect a straight line because all these things are not right. This is also called channel. Now that you have drawn your trend lines, what do you do? Remember, it's lower low, right? This low, this is touch number 1, touch number 2. This is higher lows, higher lows. Now you know that the market is on higher trend. Lower low, lower low, lower low. If you see this, you know that the market is now on an uptrend. Now that you have discovered your uptrend, you don't like now price came down, came for a test. This is not your entry point. Let it go. This is the time you are going to be in the you are going to draw your line. That time perhaps you must have not seen all these particular ones. From here, you've not seen all this, but you are going to watch. When you watch, you want price to come back to test this your trend line before you want to trade. But most amateur people do, most people are still learning. What they will do is that once price come to, maybe as they see market going down, they will just rush the market and go down. Maybe they are not here when price even came to test this place, and they see price going down, they just rush and go down with the price. It may wound you. It may pay you sometime, but that is not the best way to trade, because it could just come up here first, wipe your stop loss before going down. So once you have discovered this trend line, you draw it. The only time you want to place a trade for a sell is up here. If price, let me just use, let me draw this. I'm going to draw, let me draw something. So for a downtrend, okay, let me start with an uptrend. Uptrend, it will do this higher high. All right, price will do this. Now, the second touch is your trend line. Once price does two times, this. All right. Now you are going to draw. Okay, let me remove everything again. Let me start from the beginning. Price does this, push back, does this, push back. Yep, you now draw. After the second touch is a confirmation that price may likely go up. I'm not even, the draw is not fine, but just manage it. This first push came down, second push came down. This is when you want to draw your trend line. Here, from here, you want to connect this point to this point. Once you connect these two together, you are expecting price to be coming down here. You don't want to place your trade here. Expect price to come down, do this, higher high, do this, higher high, do this, higher high, do this, until it violates the trend, become an end. You want the price to be doing higher highs, higher lows, and higher highs. This is a higher high, higher high, higher high, higher high. All right. This is the higher lows, higher lows, higher lows. Now you know that the market is trending. Now you know that the market is. You don't want to buy. You're not buying here. You're buying only the impulse touches. This impulse move. This pullback. It is also called pullback or retracement. When you have drawn your trend line, don't chase the market. If you see price going up, imagine you are not here when the price, this one happened. This second touch is only drawing, but your entry point is the third one. And you want to wait for a confirmation candlestick, like the way we discussed in the support and resistance. You want to see candlesticks such as this for a buy, right? For a buy, you want to see something like this on your trend line. This, you want to see it here. That is a confirmation candlestick. So when it was doing all this up, you are not doing anything. If you have missed this entry point, all this point, if you miss here, you miss this entry point, stay out of the market. Don't buy, don't do anything. Wait for the next pullback. You want to wait for the next pullback to happen. If it's going to happen, if it is not going to, like this is the daily time frame. If this does not happen in 2 weeks, 3 weeks, it doesn't really matter. Let it go. Don't buy until it happens. Once it happens, you want to combine the candlestick formation and you look at the market. Is the market still trending? Is it still doing higher highs and higher lows? That is confirmation, and that is confirmation number one. If you see that it is still doing this higher highs, higher and higher lows, the next thing you want to do is the candlestick formation. The down, you buy from the down. In case you miss this one again, don't chase it. Some persons will make the mistake of because they see candlestick going up, they jump in. Where will you put your stop loss if you are buying it from this up? Probably down here. Before you know it, market will just come crash on them. And then they lose all the money. They say, I blew my account. So you want to wait for your candle, the price to push back here, for you pull back before you buy, before you continue your trend. There are so many ways of buying your trend. You can be buying your trend market, put your stop loss or take profit, or you can be trailing. There's what they call trailing exit. It means that let's say price was coming up from here, price moved to this place. Maybe this was your maybe this is your entry, this is your take profit. All right. But if price move from here to this place, you can now put your stop loss here. Instead of your target, you edit, you go to you modify your phone, your entry, your account, you go to your MT4 or 5, you modify it, your take profit now become, let's say this is your entry point, or this is your entry point. Your stop loss ordinarily would have been here. Then if price move to this level, you move your stop loss to your entry point. If price move from here, that is, you are following the trend. If you want to follow the trend, if you are not taking profit on a particular spot, you just want to follow the trend. That's how most people make money trading trend. Once price move from your entry point to your take profit, you will now move your stop loss to your entry. If price move from that entry, that is, move from here to this place, you want to move your stop loss from your entry to your take profit. You'll just be typing the numbers, editing your phone, taking them until you follow the trend and the end, come to the end of the trend. So this is how you draw the trend. Let me show you another. Let's draw another one. Let's draw another one. Let me go to 4 hours time frame. Remember, for you to identify the trend, you need to go to a higher time frame to know if the market is actually trending or not. Don't allow, because lower time frame will show you false signals. Very, so many false signals will come from lower time frame. So this is 4 hours time frame. Let's see. You connect. This is the first touch. Connect. First touch. That is bad. The first touch, the second touch, you now drag it. You now drag it. Now, if I am to watch this market for an uptrend, I am not going to buy here. I'm not going to buy all these places. I want the price to come back and test my trend line, but you must be sure that this is a valid trend line. I don't like this one. Let's do it for a downtrend now. Remember, downtrend and uptrend, the same principle. Downtrend price has to do a series of higher, lower lows, lower lows, and lower highs. So let's connect this. This is the first touch. Let's connect this and this. All right, this is the second touch. So you drag it down. Just drag it down, drag it down, drag it down, drag it down. This one is it has broken the trend line. It means that trend was not really strong. This trend was not a strong trend. It has broken the trend line. Let's look for another example of a trending market. I want a good trending market that we can play with. Okay, let me go to my favorite again. CADJPY. Let's see if you're going to see a market that is trending. Okay. Right, this seems to be, let me go to daily time frames. Let me draw my trend line with daily time frame. All right, this seems to be a trending market. The trend started from here. So I will just click my trend line. I'll connect this first touch. All right, I'll connect it with the, once you see something like this in the market, you just have to connect. You see, this is also not, the trend line is not respecting. The trend line is not respecting. But this is example of what I mean. Now, once you see this connection, this is the first touch. This is a near touch, but this is a valid touch for a trending market. This is a valid touch. Yeah. This is a valid touch. A valid touch. Right? Now, when are you going to trade? You are going to trade from here. This is your entry. You want to enter from here. You are not entering your market from up. Remember, it is from here you are going to enter, and you don't just want to enter because price just come and touch your trend line. If price touch your trend line, you want to wait for candlestick formations such as this. For a buy, you can also look at for something like this. For a buy, look at for something like this. Or you can look for all those hammer, doji candlesticks, all those things you can use to find out if you are going to trade or not. Like this now, if you look at this candles, let me zoom it. If you look at this candlestick, this was the entry point here. Your stop loss will be here. Stop loss can be down here. All right. Then you can be trailing the trend, or you take your profit in the next zone, because even trend line will have zones. Trend line respect a trend respect support and resistance zone. You can take your profit in the next support and resistance zone, or you can be doing what is called trailing exit. If you had entered here, if price moves to this line, this is your stop loss. You move your stop loss to your entry. If price moves to this point, you move your stop loss to the recent zone. If price moves to this point, your stop loss should be moved to this place. So you're actually protecting your stop loss by following the trend as it is going. Let's look at also volatility indices. Let's look at volatility indices on this trend line. Okay. Now this is V75. For those of you who are new, this is another instrument. Look at what I drew this trend line with a higher time frame. Like this is the trend line. All right. Now, if you look at it very well, this is the first touch. This is the second touch. This is when I said, okay, this market has formed a trend. Now I have drawn the trend line here right now. This is entry point. Now that you have used daily time frame to draw, you can come back for a smaller time frame for an entry. If you want to enter this market, you now have to say, okay, you can now be monitoring this market with a smaller time frame. Like this now, this candlestick, this one was an entry point. I made a lot of money when the price formed this 4 hours candlestick. This is 4 hours time frame. After the formation of these 4 hours, I placed my trade and I took my profit before price came down. Now, your trend line can also be broken, just like the way your support and resistance can be broken. But how you can take care of that kind of thing, when you have drawn your trend line like this and you are watching your market to be coming to touch this trend line for a buy, for instance, for this kind of market, this is pure uptrend, that is clearly that is an uptrend. Let's go back to uh, daily time frame, because I use the daily to confirm this, connect this to this. Then I drew the trend line. I saw that the market is actually on a trying to form an uptrend from here. So you can go back for an early entry the same way you minimize your risk. Sorry. When you are trading your support and resistance, even trend line, you have to now come back to a smaller time frame for an early entry. I took the trade here, then my stop loss was here. My stop loss was below this trend line. This is to take. No. Let me reduce this thing to. Okay. So this was my stop loss. Now you have look at the confirmation candle. This green one is the confirmation candlestick. But what if after drawing your trend line, price, let's say you are following the trend and the price now change direction? What will happen? Let me go back to the other one. What would happen if price now going up to be coming to test this zone? You want to be buying when price comes here, but price can always, when price want to change direction, look at what price will do. It will do this, to do this, to do this, break through this zone. Your trend line broken. Will you enter a sell because your trend line has broken? The answer is no. The answer is no. You are not selling when price has broken your trend line. What you want to do is, now that your trend line has been broken, you want price to do this again, just like the other one, retest. Price has to come back for a retest. When price come back for a retest, you're now looking out for a candlestick formation. All right, a bullish. Let me use bullish as an example. I mean bearish rather. You want to look forward for a bearish engulfing, like if you see something like this is a pin bar or hammer, whatever name you call it, doesn't really matter. If you see something like any of these two candlesticks on that trend line after it is broken, is a valid sell. Or you see engulfing candlestick like this on that trend line, yeah, it is a valid sell. So this is how you draw your trend line. You connect the first line to the second one, then your entry point is actually the third one. Once you have entered this price, you are expecting the price to always come down here, you buy. You can also draw channel, as in trading against the trend. Some people trade against the trend, but when you are doing channel, like this one does not have a good channel. But for some markets, you see that price will be touching a particular channel and become. So if you are trading against the trend, you are going to be buying, selling. Instead of buying, when you are buying from here, once you get to the channel, you sell. So most people take their profit on the channel for a sell. They take their profit here and then they sell and expect to buy from here again, because most people are buying from the down. All right, so let's do this example with another market. With, let's say, let's do AUD CAD, Australia dollar, Canadian dollar. Let's say for a bearish market, let's look for a bearish market. Okay. Let's see if we can do something here. Let's see. Yes. This is also a downtrend. Look at where the trend started. The trend started from here. From here. Now, when will you draw your trend line? After this first touch, allow the second touch to happen. This is when you will draw your trend line. Look at what price did. And then the third one, this is your entry point. Look at the candlestick I told you. Look at the candlestick. So your entering would have been after this candlestick. These two, one of them. You enter from here, and then you expect, if you miss this, don't chase the market. Wait for the second one to happen. If you miss this, don't chase the market, because anything can happen. Like what happened here can happen to you. It can just come down. Instead of going down, it will just wipe you. Look at what happened is wipe somebody's stop loss here before coming down all the way down here again. All right. So look at, if you were following the trend, this is where you are supposed to sell. Look at it again. It came to the trend line. It came back. It broke through this trend line before. This was a fake out. It was a fake out. You can see what happened. Market fake out. So if you are chasing the market, this fake out can happen to you. And look at what happened here. It will stop you out before coming down again. So always allow the market to come back. It is called pullback or retracement. Let it retrace back to your trend line before you trade. Like now, this was the best place to trade this market. This one here, this red candlestick, because market came back and touched this place. So it was actually an opportunity for you for a sell. So once you have drawn the trend line, like I told you, for an early entry, always use a smaller time frame for an early entry. So let's use 4 hours to also draw this trend line. Let's use 4 hours. Connect. This is the first touch. Connect with the second one. Okay. All right. Now, this is a trend line. This was not. This was it's a near touch. It's a near touch. It's a near touch. All right. It's a near touch. But this is my confirmation. I want to confirm. This was also a good point, but it's a near touch. Remember, it is not a straight line. All these things, they are called zones. This place, these two, there is not too far. Let me see how many pips there. It's not, it's a zone. So we can take this as well. Can take this, can take this, can use this, can use this. But it is better you see the one that has a clear touch. This first connect this first and the second one. It is clear when you have this second touch connected together. That one is more easier for you to understand. But does it mean you want to trade after the touches the second one? No. You only trade this third one. When you miss this one, once price come to the second one, don't trade. Allow it to come back to sell. Let it sell, whatever. Don't rush. Leave it. Most of the time, it will come back up here, or like here now. This was their trading opportunity. You take this one. If you miss this one, let's say you are not there, you miss this one. Don't join, don't follow the market, don't chase the market, allow it to come back for this touch. This is where you would have taken, but for here, this market just went up a bit before crashing down again. So basically, you're only trading the touches. This is also a you can also form. You can also trade again the trend by drawing your channel. This is, they call this counter trend trading, but it must be a clear channel. This is not even strong channel. There are some channel that you see that is very clear, that you know that is indeed a channel. It means, so what you are basically doing is you are buying from this side. When you get to this channel, you buy, but you know the market is a downtrend. But if market form a channel like this, you just draw it like the way you draw the first one. You draw the channel, and then as you are trading from the touches, you are taking your profit from the channel and you want to buy. Just draw it down. You will be looking for buy opportunities down here. Look for buying opportunities down here. That is how you actually trade the trend. The trend is your friend. Always look out for trending market. Trending market are very profitable. You can trade the market and be holding your market, be doing trading exit until you get to where price is violated. Now, this downtrend, what if it broke out from here? What if price, like what it has done here? Look at what has happened. This trend line has been broken. Like I said before, if it is broken, like now it got broken. When this happened, allow it for retest. Look at what happened after retest. This is when, if it got broken, you don't want to buy, allow it to come back for a retest. This is when you can say, okay, price has changed direction, and you now place a buy, and look at price has been going the up direction. It has changed because your trend line, your down trend line has been broken, and now the price has changed in direction. So you wait for that break to happen. Then once it breaks, you wait for a retest to happen, and then you can now place your buy trade according to what you're seeing on the screen. So I hope you now understand how to draw trend line and how to trade it. You combine it with other technical tools, support and resistance, and then there are other things you learn about trading markets. You're going to be learning about also Fibonacci retracement, how you can use Fibonacci retracement in a trading market to know when to buy and when to sell. So watch this video over and over, apply the principles, see, trading is not really that difficult. If you apply all these principles, this pure, you don't need an indicator to show you when the market is trending. Just look out for a market. Like now, you see clearly with your eyes that there is higher highs and higher lows. It's very obvious. You see it, you can connect it by yourself. You can connect it by yourself. You don't need indicator to tell you. Look at first touch, second touch, you draw a trend line. Okay? Price violated the trend line here. So once you connect these two, we're expecting price to be coming back to 30. Then you'll be selling. You watch out for breakout to happen. If you break through here, it breaks through here. Look how happen. Okay? Price break through your trend line. Then if it shows you something that's going up, you think for a buy. Your trend line has been broken. Once you apply these simple strategies, I tell you the truth, you make money from this market. Nobody will tell you to bring indicator. Nobody will tell you sell you softwares. All those things, they are just waste of money. You don't want to take signal from anybody. You are doing your things yourself because you can literally spot all these things with your eyes without somebody telling you when to buy or sell, without somebody giving you indicator or any indicator. Just look at number one, before you place in the market, is this market trending or is it consolidating? You want to know. Once it is a trending market, you draw a trend line and then you apply your support and resistance principles you have learned. You Just with proper risk management, you make profit from the market. That's all. Right. I hope this video has helped you to understand how to draw trend lines and how to trade it. Apply the principles we have learned, the candlesticks formations. Once it touches your trend line, doji, ama, all those engulfing candlesticks, you can apply them as the way you did it in the support and resistance. With this, your trading becomes very, very easy and profitable. So I'll see you in the next video. Thank you.